and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me as always is Priyanka. And Priyanka, what a day of trade we've had. The best part about today's trading session is that it is finally over, because look at the cuts that we've seen on the Nifty coming in. 1.3% cut coming in on the Nifty, though. Although we've managed to hold on to the 23,000 level, we've only done that very meekly, very merely, because at one point of the trading day we had slipped even below that 23,000 level, but we've seen some nominal amount of gains coming in. 23,071 to be precise is where we've shut off for the day. A 1.3% cut coming in on the Nifty. Sensex too in tandem with the Nifty, similar cuts coming in across Sensex as well. It's been a more than 1,000-point cut coming in on an intraday basis for the Sensex. There you have it, 1.3% cut. Nifty Bank to 1.1% lower in today's trading session. India Wix has spiked 3%. We had reached the 15 mark, but we have cooled off slightly from that point. 2.9%, roughly 3% spike coming in on India Wix as well in today's trade. What did not do well today at all, other than of course the benchmarks, was the broader markets, because Nifty mid cap and small cap 3% cut each being seen across these indices. Mid cap low by 3% and small cap in fact closer to 3.5% cut coming in on the small cap index today. Alone 580 points lower is where that index was today. Surprisingly, out of the 50 stocks in the Nifty pack, only 4 have ended in the green. You have 46 that have closed for the day in the red. Eicher, Apollo, Shriram Finance, Coal India, BEL, Tata Steel, all of these were your big losers on the Nifty. What did okay for the Nifty today? Adani Enterprises, on the back of Trump signing to pause the FCPA. That is something that worked out for Adani Enterprises today. Grasim, Trent, Bharti Airtel. These are your only 4 winners in today's trading session that have managed to hold on to the green. Sectorally, the sector that has done the least badly, if you could call it that, has seen a cut of 1.1%, and that's Nifty Bank. So imagine the sector that has done the worst, which is Nifty Realty, the kind of cut it has seen. A 3% cut coming in on an intraday basis for Realty, followed by media, auto, PSU, bank, energy, FMCG, pharma, metal, IT, your most to least sectoral losers in today's trade. But that is what the market construct has been like. A very weak and a very tepid day of trade coming in for us, Priyanka.
Handful of the stocks that you meant to say that on Nifty, barely 4 counters that we've seen. In fact, do you know the kind of advanced decline ratio we saw on small and mid cap? Mid cap had just 1:99. Mid cap 100 we're talking about, and small cap we had 5:95. So the major froth, the major deep cuts coming in on this SMID space, and maybe that part of the argument which generally the fundamental analyst has to say that it is still trading, small and medium sector are still trading at a premium to the benchmarks. Is that where the most of the dampening, most of the cuts coming in? But surely a bad day, of course, and the stocks which had a reason to fall fell the most. Eicher Motors, 7% cut coming in. Numbers were though in line, but then it's below the street estimates, and that's what they saw the traders reacting to the stock most. Apollo Hospital down by 6%, Shriram Finance down by 4%, and even talk about other kind of stocks on this SMID play. 4%, 3% was a bare minimum that we could see, the cut coming in on the stocks where there was a news. But of course, the big news was the Trump imposing the tariff on steel and aluminium counters, metal counters, dollar index again surging to close to 109, above 108, and gold, the safe haven bet, that one surging to now nearly, not just 3,000 mark, but the nearly 50 points away from that also. That one also making the news, and that's the 8th straight record high this year. These all are the key indicators, key news which globally markets are eyeing on, the kind of different asset class are reacting to day-to-day movement what Trump is making. But at the moment we've managed to close above 23,000. The deeper cuts coming in broader market. Is there more pain left? Let's understand this. Akshay Bhagwat joins in to give us a technical perspective. Akshay, thanks for being on the show with us. What we have seen is another day of hammering, and the major brunt is coming on small and medium space now. What is that you see? Where is the support emerging on the market like this now?
Good afternoon, Priyanka. So it's carnage which continues, and the broader trend, which is negative, just resumes. So we had a relief rally pullback of 1,000 odd points, and things are again getting back to from where it all started. That's the level of 22,800, which gets special relevance yet again. So if you look at the broader trend, now the resistance is working out to roughly levels of around 23,500 to 600 zone. That's from a short-term perspective. And the chances are high that we are heading down again to test the swing lows of 22,800. That's the first stopover downside. And the important levels now to watch for be 22,600. That would be in case 22,800 breaches. So the negative trend is intact. 23,000 put writings has shifted to lower base at 22,700 and 22,800. So that itself says that put writers are shifting to lower strikes. So in all, the data points are negative. FIs are on a selling spree. That trend continues, and there is no major news uptick which can really propel the Nifty ups on the upside. So in all, the negative trend continues, and expecting 22,800 on the cards very soon.
Oh, 22,800. That's quite the downside that you're seeing from current levels. Akshay, hi. You're seeing that, you're seeing some negativity to still persist in the market. Amid a market like this, what are some trades that you would recommend for our viewers?
See, the choppiness is there, and overall, I think it's prudent that you have a buy and sell trades both, considering the volatile nature of the market. So clearly, the hiding space in the current market scenario, I feel still is the FMCG pack. So if you are keen on looking at buying recommendations in this entire mayhem, it has to be from the FMCG space, and Tata Consumer is the stock I have selected on the buy side, because this stock had seen a very positive rally on the budget day, an inverse head and shoulder, a bullish price development which we noted then, and the recent correction just gives us another opportunity to get back in the stock from a short-term trading perspective. So 1082 is the ultimate target I look at from a short-term perspective, with a stop loss of 977. Second trade recommendation is the banking pack, and it's on the sell side. PSU banks are facing the brunt of selling pressure, and I think Bank of Baroda has a negative price setup going by the current price readings. The stock is headed down for targets of 195, and 218 would be the stop loss on this short bet.
Okay, Akshay Bhagwat, that's the two calls coming in, both on the one on the sell side, Tata Consumer on the buy side, and selling Bank of Baroda for target of 195 and the second target being 190. Thanks very much, Akshay, for your view and your top two recommendations for the moment. Moving on, market guru S. Naren details his concerns over the broader market valuations. Firm believer of the mutual fund Sahi Hai mantra, but did added that investing in the wrong product entails complete ownerships of the risk. It's the investor's risk, not the provider's. Listen in what exactly he had to say.
There were two problems. One was a valuation problem, which has been there for the last 12 to 18 months. We have spoken about it and it never worked. And there's a second problem in the form of flows, in the form of IPOs and various fundraising done by various people. So a lot of people have bought from investors who are more knowledgeable than the buyers. And that is the second problem that we have seen. That is the second problem, is what worries us actually, that investors have to be very careful. And the reason now, see, in our opinion, mutual fund Sahi Hai is the right thing. Is that if you invest in the wrong product, the risk belongs to the investor, not to the provider. That's what we were trying to say.
Okay, that's the word coming in from S. Naren. Let's take a look at how the FNO world is shaping up today. What's happening in the derivative space? Let's talk about the index futures trend for the February expiry. Not surprised to see short build-up on Nifty as well as Nifty Bank. A short build-up is what we're seeing across both of these. India VIX has come in very close to 14.9, so that is something to worry about today as well, because a 3% spike is what we've seen on India VIX as well. But also remember, we had gone much higher, around 5 or 6%, and we've cooled off slightly from that 15.1 mark that we had seen on the India VIX on the upside today. Now, in terms of Nifty active calls and put levels for options, when you see the 13th February expiry, active calls are being seen at levels around 23,100. That's the call writing you're seeing, and 23,200 call writing being seen on this level as well, making the resistance 23,200 that level, because Nifty is currently having trouble crossing that level right now on the upside. If you take a look at the active puts for the 13th February expiry, put buying being seen at 23,000 as well as 22,900, not giving us a clear visibility on where the support lies. But like Akshay mentioned, he is expecting to see the 22,800 mark on the cards sometime soon. So maybe support lies around those levels somewhere, but on the upside, 23,200 acting like a resistance for the Nifty right now.
Okay, all right. So for the lower strike puts are being bought into. Moving on, Eicher Motor did slid 7% today, and it was down majorly because of the numbers. What's ailing the stock? My colleague Srishti joins in with more details on that.
Well, yes, Eicher Motors was one of the top draggers in Nifty on the back of the earnings today. But what we are seeing is that there has been a miss on the margin front, because the street was expecting that given the kind of double-digit volume growth for their Royal Enfield portfolio, the margins could be quite stable. But the company is citing that they did had 70 crores of expense on the back of the new launches that we had seen coming in Q3, and because of that the margin did see an impact, and there was a miss clearly, because we have seen the margins coming at 24.2% versus our estimate of over 25% of the margins. But other than that, when we see the growth in the EBITDA number as well, then that is lagging the industry growth per se, because Eicher Motors, given the kind of valuation that it has, that's another concerning point. But specifically on the EBITDA front, there has been a 10% growth on a YY basis. But if we see the growth in some of its peers, case in point being TPS Motors, that did register a double-digit growth in their EBITDA front. Even Hero MotoCorp as well as Bajaj Auto, given the size of their business, has shown a growth of 6 to 8%. In terms of the numbers as well, where we have seen despite good volumes in the Royal Enfield portfolio, the EBITDA per vehicle and gross profit per vehicle actually was now down to a 6-quarter low. And lastly, there are concerns on the valuations as well, because Eicher Motors, all in all, we have seen that it has been commanding a premium valuation given the premium product portfolio of its, and given the kind of run-up that we have already saw in the stock, as well as now that the growth expectations is a bit moderated, then the analysts are highlighting and debating as well that the premium valuations that the stock used to command previously is something that looks a little challenging at this point in time. Brokerages have also gone ahead and downgraded the rating, case in point being Elara, which has downgraded the rating to a sell but have raised the target price slightly to 4,736 rupees. While on the other hand, Goldman Sachs has reduced its target price on Eicher Motors with a 5,900 as a target, and they are saying that they have cut FY25 and 27 EPS estimate by 5% due to higher marketing expense. These were the reasons why Eicher Motors was down in trade today.
Okay, Shrishti, thanks for highlighting the fall of Eicher Motors in today's trading session, the reasons behind it. But while we are talking about big losers on the street, let's also highlight the entire fertilizer pack that was in a free fall today. Stocks like RCF, Deepak Fertilizer, FACT, you had GSFC all low, anywhere between 5 and 6%. Now, the falling rupee and rising input costs were impacting fertilizer stock along with weak earnings. But what's the outlook going forward when it comes to the entire fertilizer pack? Sharad is here to share more details on that. Sharad, take it away.
The fertilizer stocks have been losing in trade, and of course the impact is of the Q3 updates coming in when it comes to the earnings for GSFC and National Fertilizers, where their numbers came post-market hours and they were largely weak. Now interestingly, if you look at it, the raw material imports over here, that has actually been impacted, and this is coming for a depreciating rupee. We saw in the third quarter, and even the commentaries from the companies from the fertilizer is not very strong going ahead, especially for the fourth quarter. Three important reasons: pricing constraints, global supply chain composition. There has been changes in subsidy structures. Because of this, the overall pressure is coming in the fertilizer segment, and this is coming for the second straight quarter. Certain plants also are going for their annual maintenance shutdowns, which would actually impact the demand, and the outlook impacted, especially for the limited requirements coming for the sugarcane and certain summer sown varieties in the month of February and March doesn't augur well for the fertilizer segment, as there would be a lower demand. Now, recently the budget was also there, but there was no large announcement or any extension of subsidy for the fertilizer segment, and that is also spooking the street. Now, apart from all of this amalgamation of this overall fertilizer segment, the global fertilizers industry is also coming on a muted numbers. Now, interestingly, last 1 month FACT is down 11%, NFL down 15%, and even RCF has gone down below the 14% mark.
All right, thanks very much for highlighting all the reasons why fertilizer pack was lower today. Sharad, thanks very much. But Ravinder joins us with a list of other stocks which are buzzing in trade today and the reason behind it. Ravinder.
Well, Devyani International is in focus, where company has announced its Q3 number, and the company revenue saw a uptick of 54% year-on-year basis, but company reported a net loss at 0.5 crore as compared to profit at 9.6 crore year-on-year basis, and company's margin also saw a decline decline of 87 basis point year-on-year basis. Moving to next, Schneider Electric and Infrastructure is also in focus, where company Q3 revenue saw uptick of 15% year-on-year basis at rupees 857 crore. And if we talk about PAT, then PAT can be seen at 110 crore as compared to 90 crore, which was up almost 22% year-on-year basis, and margins saw a uptick of 150 basis point year-on-year basis, and stock recover almost more than 5% from day's low. Moving to next, on back of brokerage note, Gujarat Gas is also in focus, where UBS has maintained their buy rating on Gujarat Gas and cut target price to rupees 470. They say that the rising gas cost created challenging outlook for the Gujarat Gas, and CNG segment volume growth was robust, but margins was under pressure, and UBS lower FY26 to 27 volume by 7 to 8% and gross margin by 11%. And lastly, Alchem Lab is also in focus on back of brokerage note, where Investec has maintained their sell rating on Alchem Lab with target price of rupees 5250. They say that the India's acute segment is underperforming as compared to competitors, and going forward, company expect to grow in line with IPM growth despite chronic expected to grow faster, and the slower growth and a higher tax rate in FY27 may lead to a single-digit EPS growth for the Alchem Lab. And Investec prefer Mankind Pharma and JB Pharma, and they say that the Cipla and Glamac also looks proxies with high India exposure.
Okay, Ravinder, thanks for highlighting all of those stocks for us. As we wrap it up on this edition of Your Trades, also hear out the management commentary coming in from Apollo Hospitals. That was another big loser in today's trade, and listen to their commentary on the growth outlook going ahead. But as we do that, it's a goodbye from Priyanka and me and the team that put the show together. Thanks so much for watching.
In Q4, you should probably see improved EBITDA margin. And going forward, it will depend on, the new bed expansion will not hurt the margin too much, more than 100 basis points, but we will grow to 25% and then new beds will open. So you can expect an average around 24.5%. So currently we're doing the regular diagnostics, but now we are moving into more specialized testing menu, which will include genomics and creation of a global reference lab, which we will inaugurate this month itself.